This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial endowment expert, Harold Siegel. We're taping our show on April 21st, 2017. Our time is 8:46 Mountain. Our radio show runs on 6:30 CHED, Sunday afternoon at 3. If you miss a show, they're archived on Harold's website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. We have a podcast through iTunes. Type in The World Financial Report on Radio. You'll find us there. Everyone is podcasting, and we're portable. We go on any of your devices, and you can listen to us anywhere. Connect with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, 1-800-432-1022. As we tape today's show, the big news yesterday. Campaigning for Sunday's final round vote in the French election was suspended after yesterday's deadly terrorist attack in Paris, that's Thursday, which left a policeman dead. At midnight Friday local time, the campaign officially ends, with no more polls or public statements from campaigns permitted. Now, the top two candidates, Macron and Le Pen, they are leading, and how it works, they go to a runoff here. And the top two candidates will go head-to-head, and that will be May 7th in a runoff, but the French election happening on Sunday. It was interesting to notice this on Bloomberg before I came to the radio station here to do the show with Harold. Legendary trader Paul Tudor Jones says U.S. stocks are trading at unsustainable levels and should be terrifying for Janet Yellen and investors. And Harold, obviously stocks are lofty, and that's why we advocate obviously having a balanced portfolio that includes hard assets like diamonds, gold, and silver, but we are big believers on the U.S. dollar.
You better believe it. And even though President Trump has come out and said that he would like a weaker dollar, it's just not going to happen, because the fact is that the U.S. dollar is a reserve currency, and all other countries are lowering interest rates. Nobody's raising interest rates, so the fact is that if we're going to continue to raise interest rates here in the United States, then the U.S. dollar has got to get stronger. You know, it's just odd, though, that he's accusing China of manipulating their currency, and isn't he basically doing the same thing by trying to talk down the U.S. dollar? Obviously, he would like to see a weaker dollar because it makes U.S. exports that much more desirable. However, it's just not a possibility. Unless something drastic happened within the United States, which I don't see at this particular point, I see the U.S. dollar getting stronger and stronger. Now, there will be times that the U.S. dollar could weaken against the euro slightly or against the Chinese yuan. The currency that I'm most concerned about is the relationship between the U.S. dollar and the Canadian dollar. At this particular point, the U.S. dollar is sitting at par, and the Canadian dollar is at 135. That means that if you were going to the United States and you wanted to convert Canadian to American, it would cost you $1,350 Canadian to get 1,000 American. Now, we feel that the Canadian dollar is going to fall substantially, and the U.S. dollar is going to rally based on the fact there's probably going to be at least 2 or 3 more interest rate hikes in the United States. What that could basically do, and it's not over a short time, it could be over the next year to 2 years, but we anticipate that the Canadian dollar will go all the way down to around the 62-cent level. And we expect that the U.S. dollar is going to go to the 115 level, which means that there's a huge amount of money to be made on the currency conversion of the Canadian and American dollar. So for the last several years, for the last 5 years, we've been recommending that our clients get into American dollar-based investments with us, because we have private investments that not only pay in American dollars, which right now is 30% higher than the Canadian dollar, but on top of that, our investments return over 25% a year. So we've got some amazing opportunities. If you just sit there and watch the Canadian dollar continue to fall and the U.S. dollar get stronger, you're missing out on a phenomenal opportunity to cement your financial future. Just to sit there and watch it doesn't make you any money. You've got to be proactive. And we're saying at this point here that there's still an opportunity to make a tremendous amount of money converting Canadian to American and getting involved in some of our private assets. Now, we like the gold market. The fact is that normally when the U.S. dollar is strong, the gold market is weak. But because of geopolitical situations right now, with the potential of threats towards North Korea, the U.S. bombed Syria a couple weeks ago, dropped a huge bomb in Afghanistan against ISIS. There was the terrorist attack in Paris on Thursday. You've got a lot of geopolitical situations going on which is supporting the price of gold. I did make a recommendation a few weeks ago saying that it is possible, very possible, and this would be one of the first times that it'll actually be the second time that this would happen, is that gold and the U.S. dollar could rally at the same time. It happened back in the 80s, early 80s, when the U.S. dollar hit tremendous highs, and because of inflation, interest rates were at 22%, and gold hit $850. So, again, I'm expecting a phenomenon to happen in the metals market. Again, and if we do see a very aggressive Donald Trump, which I do believe is going to happen, that we are going to see a very strong military move, and he's putting a lot of money into the military here in the United States, and I truly believe that we are going to see a rally in gold and a strong dollar at the same time, and we're going to be able to bring to you within the next couple weeks physical gold, where you'll be able to invest in physical gold at the bid price with no commissions. We've got a phenomenal program for you, and we believe that there's going to be an opportunity to make a lot of money in the gold market again. And don't forget, the gold is priced in U.S. dollars, which also helps our overall situation because we want to have as much money into the U.S. dollar as we possibly can. Again, the currency markets are extremely important. If you're traveling, if you're doing business with other countries, you'll find how important it is to be in the currency markets. But as a speculator or as somebody who's just trying to make a good investment, there's tremendous opportunity there. We're not short-term traders here. We don't make a recommendation for a few days and get out of it. We're looking for long-term trends in the market. Back in 2000, when we first recommended gold at $250, it was an 11-year bull market that went from $250 to $1,900. We saw another long-term trend in oil that we caught and a long-term trend in the currency markets in the euro. Now we see a long-term trend coming in the U.S. dollar, and for the next several years, we anticipate that the U.S. dollar is going to be strong and certain currencies are going to fall off. If that's going to happen, it would be criminal of us not to take advantage of that, or at least not to recommend it to you. Now, I'm not in any way, shape, or form going to recommend that you go into the futures market or anything speculative. That's ridiculous. 90% of the people that trade in those markets lose their money. If you wanted to be just ultra-conservative and not do anything except convert some Canadian to American, right now it would cost you $1,350 to convert to get $1,000 American. What I'm saying over the next couple of years, soon it's going to cost you $2,000 Canadian to get $1,000 American. So you're looking at a 50% difference in the currency market, and that's a beautiful return. If you can make 20, 30, 40, 50% return on your money at a time when keeping your money in the bank is making you less than 0.5%, and going into the stock market, 90% of the people lose that trade stocks. Even though the U.S. market is rallying, it's only a few companies that are doing well. And the reason that the U.S. stock market is doing strong is because there was so much money sitting on the sidelines prior to the elections that once Trump was in and the investors felt that Trump was going to be a decent president, going to build and do the right things, all of a sudden that money that was on the sideline came pouring into the U.S. market. It's not that the U.S. market was bullish all of a sudden. It was that you had trillions of dollars sitting on the sidelines, a lot of it in Europe, and that money is out of Europe and now invested in the United States. Whereas you saw a huge rally in the U.S. stock market, a lot of people still haven't made money from it. And we didn't see the same follow-through in the Canadian market because all in all, the Canadian market is in trouble. Mostly with the real estate market. The fact what's happening in Toronto, the people that are capitalizing on this maybe making a huge amount of money, but there's no doubt it's a bubble that's going to explode, and the general public gets involved at the wrong time. My strongest recommendation is not to get involved in real estate in Ontario at this particular time. Let the market come back down. Look what happened in British Columbia. A similar phenomenon was happening, and all of a sudden the Vancouver market cooled off because the province put a 15% tax on foreign investors buying real estate in British Columbia. So, again, you've really got to be careful at this particular point. There are very few investments that are not extremely speculative, and again, that you can rely on. You can't put your money in the bank because you're making less than 0.5% after inflation and income taxes. You're literally losing money. Very soon, we are going to see negative interest rates creep into the marketplace. It means that keeping your money in the bank, which isn't safe anyways, because of a recent bill that was passed in Canada, but the fact is that keeping your money in the bank makes no sense. If we go into negative interest rates, which we definitely will within the next few years, you're literally going to be paying the bank to keep your money in the bank instead of the bank paying you interest. So, again, things are changing, people, and we got to stay on top of it, and there's tremendous opportunity for you to make money again. If you're ever looking to retire and you've got your money sitting in a retirement savings plan, it's just not going to happen for you. There's no way in the world that those type of markets can return the type of returns that you're going to need to retire. And then obviously getting a 0.5% return in the interest rate market is not going to help you one bit. We have private investments that pay over 25% a year that most of our clients have invested into, and they're paid in U.S. dollars. On top of that, we're going to bring you gold with a phenomenal program coming up in the next couple of weeks. So you definitely need to inquire about that because it's a phenomenal opportunity to make money in the hard asset market.
Speaking of the Canadian dollar, as we tape today's show, Canadian dollar dipped below 74. It was at 73.93, so 73.93. Right now it's at 74.03. So it seems to hit 74 and bounce off, but it was briefly below 74 cents as we tape today's program. Obviously, Harold was touching on what was happening in British Columbia, and it's important to note the government in Ontario has now done the same thing. That was the big news from this week. Ontario announced a slew of measures, including a tax on foreign buyers and expanded rent control as part of a plan to temper escalating home prices in Toronto. The 15% levy will apply to non-Canadian residents, non-permanent residents, and non-Canadian corporations buying residential properties containing 1 to 6 units in the Greater Toronto Area. That, according to the Ontario provincial government, rent control will be imposed on buildings constructed after 1991, effective April 20, which limits annual increases. So, basically, the Ontario government has done what they did in BC, 15% levy on those non-Canadian citizens that are looking to buy in Ontario, and that no doubt will have a chilling effect on the housing market in Ontario, similar to what's happened in British Columbia. If you want to really find out what that means to you and your investments, speak with Harold. 1-800-432-1022. 1-800-432-1022. The website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. What does that mean for your portfolio that Ontario has put this levy in place? Speak with Harold. He'll be happy to take your call. 1-800-432-1022. Our featured diamond of the week from rarecoloreddiamonds.com is a 1.72 carat cushion cut fancy yellow internally flawless. This is a stunningly beautiful diamond, big diamond too at 1.72 carats, cushion cut fancy yellow internally flawless. See it at rarecoloreddiamonds.com, rarecoloreddiamonds.com, featured diamond of the week. one of the stories that we have in our free weekly newsletter, and we really encourage you to get on the list to get our newsletter. You'll be on the same page that Harold and I are on when we do the radio program. You'll see the same stories. You'll be able to go through them in a matter of 5-10 minutes on any device that you have, or you can spend hours delving further if you choose. Connect with Harold, and he'll be happy to send out our free weekly newsletter to you. RareColoredDiamonds.com, 1-800-432-1022. Larry Fink, and he is the CEO of BlackRock. Warning signs are getting darker for the U.S. economy. He said, the lackluster growth of the U.S. economy and uncertainty around the Trump administration's ability to quickly pass key reforms poses a risk to markets. There are some warning signs that are getting darker, said Fink in an interview Wednesday on Bloomberg. Fink, who runs the world's largest money manager, mentioned a pullback in car sales and a slowdown in merger and acquisition activity as an indicator that uncertainty is rising. The slowest economy among the G7 nations is the United States. The stock market needs validation that U.S. corporate earnings will stay strong and that the policies of U.S. President Donald Trump regarding taxes, regulation, and infrastructure will advance in Congress in order to move higher. Fink says if we don't have earnings validation in these higher PEs, we could adjust down 5 or 10% from here. One of the other things that we had in our free weekly newsletter, big money investors haven't hated U.S. stocks this much since the financial crisis. Investors are worried about the U.S. stock market, according to Bank of America Merrill Lynch's latest Global Fund Manager survey. Institutional investors think stocks are getting too expensive, and they're starting to back away from the market. For one thing, the share of fund managers who are underweight U.S. stocks is net 20%. And this is a massive shift from the 1% net overweight position of investors last month. Big money investors haven't been this net underweight stock since January 2008 during the depths of the financial crisis. And as we touched on this morning, billionaire investor Paul Tudor Jones has a message for Janet Yellen and investors: be very afraid. The legendary macro trader said that years of low interest rates have bloated stock valuations to levels not seen since the year 2000, right before the NASDAQ tumbled 75% over 2 years plus. The measure, the value of the stock market relative to the size of the economy, should be terrifying to a central banker, Jones said earlier this month at a closed-door Goldman Sachs asset management conference, according to people who heard him. Jones is voicing what many hedge funds and other money managers are privately warning investors: stocks are trading at unsustainable levels. A few traders are more explicit, predicting a sizable market tumble by the end of the year. And last week, Guggenheim partner Scott Menard said he expects a significant correction this summer or early fall. Paul Yang, a macro manager who has run Willowbridge Associates since 1988, sees a stock plunge of between 20 and 40%, according to people familiar with his thinking. And as we touched on, Larry Fink of BlackRock, and they oversee $5.4 trillion, are very concerned about stocks. He sees them possibly going down 5 to 10%. And Harold, obviously, a lot of the smart money is very, very concerned about what's happening in the financial markets right now. Now is a time for caution. We have about 4 minutes left in our first segment, but this probably will not have an effect on the U.S. dollar.
No, again, the U.S. dollar is the reserve currency, and the U.S. dollar will remain strong because the U.S. is the only country that can raise interest rates. There's no country that's raising interest rates. Everybody's dropping interest rates. So the fact is that that's a no-brainer. I just don't see any currency at this point that is going to overtake the U.S. dollar. And again, we've been in these situations before. Yes, the market is high, but the fact is that there's so much money sitting on the sidelines, and there's very few places to put it. So again, on any type of correction, I expect a lot of money to go back into the market, and I see the Dow going up to 25,000 very quickly. So again, I'm not as bearish on things as other analysts are. In actual fact, I just see that the U.S. is the only game in town right now, and if you know what you're doing, there's a lot of money to be made in the currency. That's where I shine. That's one of the biggest markets that I've traded for 35 years has been the currency markets, and we've done extremely well with it.
Connect with Harold. Find out more about investing in hard assets, diamonds, gold, and silver. If you're wondering about retirement, how you can invest today so you can retire tomorrow, connect with Harold at rarecoloreddiamonds.com, rarecoloreddiamonds.com, 1-800-432-1022, 1-800-432-1022. Our featured diamond of the week is a 1.72 carat cushion cut, fancy yellow, internally flawless. You can see it online at rarecoloreddiamonds.com. We'll talk about diamonds in detail in the second half of the show. It was interesting, the United States, they had their census come out, and it pointed to some very interesting changes. More Americans 18 to 34 now live with parents than live with a spouse. 4 decades ago, in the mid-70s, young American adults 18 to 34 age bracket were far more likely to be married and living with a spouse than living in their parents' home. But that is no longer the case, according to a new study by the U.S. Census Bureau. There are now more young people living with their parents than in any other arrangement. According to the Census Bureau, what is more, says the study, almost 9 in 10 young people who were living in their parents' home a year ago are still there today, making it the most stable living environment. The number one living arrangement today for Americans in the 18 to 34 age bracket, according to the Census Bureau, is to reside without a spouse in the parent's home. And that is a very, very big change. And a lot of it, I would imagine, has to do with the economy, the financial crisis, what we're seeing with massive student debt in the United States. It's a very, very difficult time for the millennials. And at some point, the millennials will get that debt paid off and get their feet under them financially. And when they do, they are a powerful force, similar to the baby boomers. It will be interesting to see when they finally get their feet under them and move out of their parents' home, if they ever do. I know a lot of parents are praying for that to happen. If they ever do, you're going to see some economies change in a major way, similar to what happened during the baby boomers era, where they really drove financial markets. Connect with Harold. Find out more about how you can invest today so you can retire tomorrow. Connect with him at 1-800-432-1022. The website, rarecoloreddiamonds.com. Going to come back and talk about diamonds as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping our show on April 21st, 2017. Our time is 9/11 Mountain. Radio show runs every Sunday afternoon, 3 o'clock on 630 CHED in Edmonton. If you miss a show, they are archived on Harold's website, rarecoloreddiamonds.com. You can go there and listen to them anytime you want, 24/7. As well, we have a podcast, and we are portable. The show goes with you anywhere on your portable device. All you need to do is connect with us, and you can go to Harold's website and sign up for the podcast. It's on iTunes. Type in The World Financial Report on Radio. You will find us there. To connect with Harold and get more information about the financial markets and the opportunities that he has in place for investment purposes, speak with him at 1-800-432-1022. The website is rarecoloreddiamonds.com, 1-800-432-1022. Our featured diamond of the week. And this is a big, thick, chunky diamond from rarecolorediamonds.com, 1.72 carat, cushion cut, fancy yellow, internally flawless. This is absolutely gorgeous. It's a big diamond. You can see it. Featured diamond of the week, rarecoloreddiamonds.com. And Harold, tell us a little bit about this yellow, internally flawless. It is a very big diamond.
It is, and it actually looks bigger than it is because it's a cushion cut, which is basically a square cut diamond, a radian cut, with more rounded edges. They tend to look larger. So this diamond, even though it is large at 1.72 carats, it does look like it's over 2 carats. It's gorgeous. The color on it is spectacular, also known as a canary diamond. So you've got the weight at 1.72 carats. The cut is a cushion cut. Color is fancy yellow. And the clarity is internally flawless. So only one diamond, just to give you an example as to how small most diamonds are, only one diamond in 15 million is 2 carats or over. So the fact is to get a diamond, that's 1.5 carats, 1 3/4 carats, 2 carats, you're talking about a larger diamond. And this one, as Randy mentioned at the beginning, is chunky. So it looks like it's well over 2 carats. It looks amazing in a ring or a necklace, but it's just a great investment diamond that will go up by about 15% a year. You put this diamond away for the long term, and, 10, 15, 20 years, it'll do way better than your retirement savings plans or anything like that. In fact, these are the type of diamonds that I put away for my children when they were growing up and my grandchildren. Now I'll have these type of diamonds put away for their future. You put your money in the bank and you're going to be lucky to get 0.5%, where you could put this away, this particular type of diamond, and make about 15% return on your money. So if you're looking at, retirement and diversification, this is an excellent diamond to put away in your portfolio because it isn't ridiculously expensive, but over time it certainly will be. It's a diamond that could go up substantially, again, over the next 15 years, 20 years. And I like to put these diamonds away for my young grandchildren because by the time they're ready to make it out of college and make their way in the world, they've got an asset that is worth something. If you give them stocks or bonds or whatever, those are affected by the overall marketplace, and as we know, back in 2008, stocks like General Motors went under and other companies like that. So I feel much more comfortable giving or putting my money into hard assets that are all in U.S. dollar-based investments because that's where most of the money is going to be made.
Speak with Harold at rarecoloreddiamonds.com. rarecoloreddiamonds.com, featured diamond of the week, a 1.72 carat, cushion cut, fancy yellow, internally flawless. See video of this diamond at rarecoloreddiamonds.com, featured diamond of the week. There was an article that we found this week, and it is so well done, and it speaks on the raging demand for fancy colored diamonds. In light of the recent sale of the Pink Star, so many people are looking at colored diamonds, and it's not a surprise. Last week, history was made when Sotheby's Auction House in Hong Kong, they actually auctioned off a massive 59.60 carat flawless pink diamond going by the name Pink Star. It was sold to Hong Kong-based jewelry company Chow Tai Fook for a whopping $71.2 million. This is not the first time a colossal sum of money has been spent on fancy colored diamonds. This is the first time in the history of diamond auctions such an expensive transaction has taken place at that level. Before, the recent high was the elusive 14.62 carat Oppenheimer Blue, which sold for $57.5 million. Now, fancy colored diamonds are rare, priceless, and more importantly, resistant to any kind of recession. So it's not a wonder why people have always taken a fancy towards fancy colored diamonds, rare colored diamonds. However, their demand has considerably increased over the last few years And the high net worth individuals, especially in Asia, according to reports, are willing to pay anything, just about anything, to get their hands on one of these precious gems. When chemical elements such as boron or nitrogen are trapped during the process of a diamond formation, colored diamonds are formed. Only 1 carat of colored diamond is found in a total of 10,000 mined diamonds, and when these are further scrutinized for intense color grading, a measly 1 carat may be found in a total of 25,000 diamonds. So it is this rarity factor that makes rare colored diamonds, fancy colored diamonds, inestimable. In 2008, when the economy took a heavy beating, investors were looking for alternatives or tangible forms of investment rather than stocks and shares. The wealthiest 1% began investing in wines, paintings, precious metals, and rare-colored diamonds, gemstones. Now, according to the Fancy Color Research Foundation, as of September 30, 2016, pink diamonds have increased 180%. The highest thus far, followed by blue and yellow, which are up about 70% and 90% respectively. Market fluctuations have no effect on diamonds, colored diamonds. They are long-term assets which have proven to fetch great return on investment. Any investor who has made his bid over a rare-colored diamond will tell you that it is now worth multiple times its original price. And we have witnessed auction prices like never before in the last few years. In 2015, May, a 14.62 carat blue diamond auction off for $57.5 million, and in November the same year, the elusive 12.03 carat blue moon was sold for $50 million. It was the only diamond that was sold at $4 million per carat. Now, the Pink Star has joined this league of extraordinary colored diamonds, breaking all records in total value at close to $72 million. And there is a chart here, and I'm not going to read it. What I want you to do is call Harold, 1-800-432-1022, rarecoloreddiamonds.com, and have him send you this article, and see the article and read the charts associated with rare-colored diamonds and the price appreciation. They have a chart that shows the price appreciation from 1995 to 2017. And Harold, I know you took a look at the article. It's very impressive to see what pink diamonds have done and other diamonds have done at auction. It's a very exciting time for hard assets, in particular, rare-colored diamonds.
You bet, Randy. Again, seeing that, these amazing diamonds have hit record prices at auction, and the Pink Star is just a phenomenon, because the fact is that it's the largest diamond. It was off the charts rare, and the fact is that even though it sold for $72 million, it was priced per carat well below what I thought that diamond would sell for. So there's still a tremendous amount of room for the owner of that diamond to make a lot of money on it. We've seen huge returns on blue diamonds. Now we're starting to see huge returns on green diamonds. Green diamonds, a couple of years ago, we started recommending to our clients because we felt the green diamonds are going to be the next blues, and blues have gone up to $4 million a carat. So we're very, very excited about the rare colored diamond market. Not only do we sell cut and polished diamonds, we also have a division, Diamanti Atelier, that has over 3,000 pieces of museum-quality jewelry. But then we also have our mining business, where we literally mine some of the most beautiful colored diamonds with a major concentration on greens. Green diamonds turn green because of uranium seeping into the ground and turning the diamond green. And last year, we saw the Aurora green sell for $3 million a carat. It was a 5-carat green, sold for just over $15 million. So, again, that confirmed to us that we were on the right track as far as another trend in the diamond market. And where blues have skyrocketed, pinks are going to do the same, because we know that the mine that produces them is going to close by 2020. So pinks are an amazing investment now, and now the green diamonds are really starting to shine. So we're very excited. The colored diamond market is on fire, And again, our programs that are involved in the rough diamond mining business are very profitable and in U.S. dollars, and we do allow our clients to invest with us. So if you're looking to make some money in the rare diamond market and just basically invest as a partner with us, those opportunities are available to you.
Speak with Harold personally, privately, 1-800-432-1022, the website rarecoloreddiamonds.com, our featured diamond, and this would be a beauty to start, a portfolio of diamonds with 1.72 carat, cushion-cut, fancy yellow, internally flawless. Well, we were talking about the pink star that ended up becoming renamed, and it was from the company that picked it up. They decided to rename the diamond. And there is another diamond that could go for a bigger price. And yes, it's an exciting prospect, to say the least. Pink and blue diamonds could fetch $68 million. That's right, $68 million. The pink star, by the way, was renamed the CTF diamond. But $68 million, Sotheby's will offer what it's called the most valuable set of earrings in auction history. Geneva, next month. The two stones don't match in color. The pear-shaped Apollo and Artemis diamonds, one blue and one pink, will jointly lead the magnificent jewels and noble jewels sale in the Swiss city on May 16 as separate lots, Sotheby's said last week. Now, obviously, you could buy them together. The auction house estimates the Apollo Blue, a 14.54 carat fancy vivid blue internally flawless diamond, $38 million to $50 million, or up to $3.4 million per carat. Now, the piece is the largest of its color and clarity to come under the hammer. Its counterpart, the Artemis Pink, a 16-carat fancy intense pink VVS2 clarity diamond, is expected to fetch $12.5 million to $18 million, or up to $1.1 million per carat. These exquisite color diamonds are enormously rare, and each is a wonderful stone in its own right, according to David Bennett. He is the chairman of Sotheby's International Jewelry Division. Together, as a pair of earrings, they're breathtaking. We've named them after Apollo and Artemis, a twin brother and sister of great power and beauty, who are among the most widely venerated of the ancient Greek deities. In a separate magnificent jewels auction in New York on April 25, Sotheby's will offer a range of colored diamonds and gemstones, including a hexagonal, and this is rather interesting, a 34.40 carat Colombian emerald. The stone, the estimate on it, $800 to $1.2 million. But Harold, here we had the diamond, the pink star, and it was renamed after Chow Tai Fook, CTF Pink. We could almost have another record breaker between those two earrings, Apollo and Artemis diamonds. And we do actually have stories on the earrings in our free weekly newsletter. I encourage you to take a look at the picture of the diamonds. They are absolutely one of a kind. And can you imagine walking into a party wearing those, and people then finding out they were worth around $70 million? You would be the star of the show, and more than likely would need a guard or two, I suspect, Harold.
You better believe it. Oh, they're gorgeous, man. They are absolutely gorgeous. Just such a phenomenal asset to own. And, the thing is that rare colored diamonds are just getting rarer and rarer. They're just not finding them anymore. And obviously, as far as pinks go, once the argon mine is gone, we'll see very, very few pink diamonds ever again. So these are tremendous opportunities to get into a long-term hard asset like a rare colored diamond, an asset that will never decline in value, that does increase in value substantially over time, and again is priced in U.S. dollars or could be sold in other currencies. So it's just a phenomenal asset to own. Very excited to see what those earrings are going to sell for, Randy. It's going to be spectacular.
Well, it's no doubt going to be a big number. It seems in Geneva in May, when they have those sales, Sotheby's and Christie's, they bring to the table some of the rarest diamonds, the rarest of the rare. And the track record is big, big numbers when these diamonds go for auction. So it should not be a surprise to anyone that next month will be a much-watched month for auctions in Geneva as Christie's and Sotheby's hold their sales a day apart. That is something they've been doing for a long, long time. Our featured diamond of the week is a 1.72 carat cushion cut, fancy yellow, internally flawless. Speak with Harold. You can connect with him at rarecoloreddiamonds.com, 1-800-432-1022, and he'll be happy to tell you about this diamond. You can see it, featured diamond of the week, at rarecoloreddiamonds.com. But now is the time that a lot of people are asking themselves, and Harold has lots of different programs in place where you can be making money instead of sitting in a GIC at less than 1%. People ask, it's very difficult to retire in the financial world we find ourselves in today when you're making 1%. Everyone is worried about losing the retirement money due to another financial crash, and we heard that today on the radio show with different financial experts coming out and saying they're very concerned about the stock market. Will the average everyday person be able to retire in an environment of negative interest rates? And that is a very good question. With low interest rates, central banks have manipulated stocks, bonds, and real estate to a point where they're historically overvalued and could face a major correction at any time. And then here in Canada, obviously, as we reported today, the Ontario government putting in a 15% levy for those that were buying real estate from outside the country, the same that happened in British Columbia. As a result, you're going to see real estate cooling down to what point in Ontario? I guess we'll have to see, as these things have just been put in place. What does that mean to a Canadian investor? You factor in Bill C-15, and that's bank bail-ins, and Harold can tell you about bank bail-ins in Canada. Negative interest rates, weak Canadian dollar, housing markets in Vancouver and Toronto a concern, oil prices, geopolitical concerns, cashless society. Lots of financial questions today, people looking for answers, and that's why Harold does the radio show. How can you invest today so you can retire tomorrow? That's why we do the show. Speak with Harold personally and privately. Call him, 1-800-432-1022. The website is rarecoloreddiamonds.com. He speaks with hundreds of listeners in a month, and he'll be happy to sit down with you and talk about your portfolio, give it a critique, and let you know what some of the possibilities are that he has through rarecoloreddiamonds.com. And Harold, you're happy to take anyone's call.
Oh, you bet. I love speaking to my clients and listeners to the show and trying to help as much as we can. So I know it's very confusing right now. I know that, we're all working extremely hard and not seeming to get to where we need to get to. And a lot of the reasons is that, you have to be open-minded to other alternatives. Because in all reality, the investments that we grew up with are not great investments at this particular time. 90% of the people that trade stocks lose their money. That's a horrible odds against you. Same thing with trading highly speculative commodities and things like that. So that is not the answer. No longer getting 10% on your money, keeping it in the bank, or even 5%, you're getting 0.5%. So again, the problems are right in front of us, but there are solutions. And again, I've been in the investment business 35 years. We do have private programs that we allow our clients to invest in as partners, and they're all based in U.S. dollars, which again is putting our clients into a very strong financial situations at a time, when there's very few opportunities available. So if you find that you're struggling, you don't know which direction to turn to, just give me a call. I'll be more than happy to analyze your portfolio, help you, and make recommendations. And if I feel that you're qualified to invest with us, it would be my pleasure to help you in that area also.
Speak with Harold. The call is free. Everything discussed, confidential. 1-800-432-1022. 1-800-432-1022. The website, rarecoloreddiamonds.com. rarecoloreddiamonds.com. The average Canadian home is worth $548,517 in March, up over 8.2% from the previous year. Number of sales higher too, and nowhere more than Toronto. Canadian home prices continue to march higher, with that average price obviously very high. According to figures released Tuesday, the national figure continues to be skewed higher by hot activity in and around Toronto. The Canadian Real Estate Association said that in addition to prices, the volume of home sales also rose during the month, hitting an all-time high. But as was the case with prices, the sales spike can be largely traced back to the feverishly pitched activity in the Greater Toronto area. And our top story of the day, if you did miss it during the week, we knew it would be just a matter of time, but they have decided to do something about the housing market in Ontario, similar to what was done in British Columbia. Surging Toronto home prices have forced the Ontario government to put curbs on buyers. They announced a slew of measures, including a tax on foreign buyers and expanded rent controls as part of a plan to temper escalating home prices in Toronto. The 15% levy will apply to non-Canadian citizens, non-permitted residents, and non-Canadian corporations buying residential properties containing 1 to 6 units in the Greater Toronto area. The provincial government said in a statement Thursday rent controls will be imposed on buildings constructed after 1991, effective April 20, which limits annual increases. And Ontario Premier Kathleen Wynne's administration will also take steps to boost the supply of homes, which people feel is a concern in the United States and also becoming a concern in Canada in markets like Toronto. But Harold, we have about 2 minutes left here, so we've talked about it for some time. The Vancouver market overheated, Toronto overheated, Ontario overheated, and finally both markets have done something about it. The ramifications for the average Canadian investor yet to be felt.
True, but what it does, it hurts the mortgage market, and we could see ramifications from this. So again, every action, there's a reaction, and we're going to see what that is, but every indication is that it's not good for the economy to see something like that happen. To restrict, sales of real estate is only going to put pressure on the banks. So, again, we'll see what happens, but with C-15 bill, with interest rates down to 0.5%, with the markets the way that they are, it's a very confusing and dangerous time. If you want more clarification, please give me a call. It would be my pleasure to spend as much time with you as you need to analyze your situation and make recommendations going forward as to how you could do well in these markets.
As Harold has said for a long time, how do you invest today so you can retire tomorrow? He has programs in place. Give him a call. That's why we do our radio show. He speaks with you on a weekly and daily basis, obviously daily, weekly, monthly. He'll be happy to speak with you. I know that a lot of people who have listened to the radio show for a long period of time, 10, 15 years, who have never called in before, are making the call for the first time, and even newcomers to our radio program who are listening for the first time on 630 CHED are picking up the phone, and that number, it's a free call, 1-800-432-1022, and Harold will be more than happy to speak with you. Harold, thank you for your knowledge and another great show.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
The website, rarecoloreddiamonds.com, 1-800-432-1022, our featured diamond of the week. Take a look at it. Featured diamond, rarecoloreddiamonds.com, 1.72 carat cushion cut, fancy yellow, internally flawless. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.